Hello and welcome back to All Things Money. I'm your host, David Blain. Thank you for joining us today for the second segment. If you missed the first segment, head on over to our website, which is www.dlblain.com. There you'll find information on myself, my firm, as well as archived copies of the show. And I forgot to mention this in the first segment, but we love to hear from our viewers and listeners. I know we got a bunch of new ones out in California, so if you would like to comment on the show or there are topics that you like to address on the show, the phone number is 252-633-0107. And of course you can contact us directly here at the show. The email is allthingsmoney@dlblain.com. And the easiest way to contact us is go to the website, which is dlblain.com, and there's a big contact us button there that you can send us your comments. All right, so before the break we were talking about the Dow making some changes, the index committee removing 3 companies, adding 3 companies, and I was commenting that, you know, when you're looking at an index, there's a subtle form of market timing and things going on here when you're looking at different indexes, and I really don't like the Dow. So we have Alcoa, Hewlett-Packard, and Bank of America leaving. We have Nike, Visa, and Goldman Sachs entering the Dow. Some other notable changes over the year. For example, in 2004, AIG, Pfizer, and Verizon replaced AT&T, Kodak, and International Paper. Of course, AIG, went down the tank since then. And a year ago, Insure United Health Group replaced Kraft Foods. In 2009, Citigroup was replaced by Travelers Company, and GM was supplanted by networking company Cisco. And so you see that they're making these changes, and it's almost like buying and selling companies from your portfolio, that as these companies, their price declines or they lose relative importance, they're removing them from the index, and therefore they're actually changing the characteristics of the performance of the index. They're trying to keep the performance up. I mean, let's face it, they want the Dow to do well so that people use it as an index. Investment firms, they have to pay money to index their mutual funds or exchange traded funds against the Dow. I mean, there's huge business in licensing fees. The Dow, the S&P 500, these type of things, just a massive amount of licensing fees in the industry to be able to use these indexes. And so we like to see people use a more broad-based index, such as the Wilshire 5000, or even like a Vanguard index fund. There's an ETF, VTI, which is the total U.S. stock market index. It also has a mutual fund, would be a good comparison. If you have any sort of diversification whatsoever overseas, you want to use a global type index or a weighted index that weights the percentage you have in the U.S. versus the percentage you have overseas. We've talked about this before. Maybe we'll do another show on the correct benchmarking. But anyway, this came out today, a couple of changes to the Dow. I thought it would be a good time to talk about. Just don't pay any attention to the Dow. It's really kind of meaningless. Another thing that you shouldn't pay attention to, you may notice I spent a lot of time on the show telling you things you shouldn't pay attention to on the regular media, because a lot of it, I call it financial pornography. It's just there to sell news, sell magazines, things like that. And for a long-term investor, really has no meaning whatsoever. Now, this is another one. You may have heard a couple days ago that the NASDAQ halted. Trading on the NASDAQ was halted for several hours. Now, the NASDAQ, you have different trading. It used to be all stocks were traded on the New York Stock Exchange, and you had people running around with order tickets. I need to buy 100 shares of Coke, and someone else, there were these posts where people would stand to sell. So Coke would be traded at this post, and there'd people be running all over the exchange floor, and there's still a little bit of that going, but the majority of it has moved to electronic changes. And NASDAQ was one of the forerunners of electronic trading, and they had different listing requirements, and so there were a lot more technology firms, maybe a little bit more smaller companies, and so it has a reputation of being more of a tech-heavy index. But the reality is the NASDAQ is simply an electronic trading platform that companies list their shares for sale on. Well, anyway, it's very important to the trading world. And a couple of days ago, maybe it was a week or so ago, trading was halted. They had these software glitches, technology glitches, and nobody could trade. And so traders were saying, oh, we've never seen anything like that. And the regulators, of course, all these bureaucracies were coming in and saying, oh, we need to change this and change that and fix that. And of course, President Obama was briefed on this. And but, you know, at our firm, we just kind of yawned and said, oh, no big deal. Who cares? No problem. And as a long-term investor, you should have exactly the same reaction. Trading is very complicated today. Software, you know, your computer at home occasionally crashes. For the long-term investor, no impact whatsoever. And it should not worry you at all as to the stability of the markets. So the Securities and Exchange Commission, I'll quote from Mary Jo White, said the interruption in trading, while resolved by the end of the day, was nonetheless serious and reinforced our collective commitment to addressing technological vulnerabilities of exchanges and other parts of the market. Well, for long-term investors that by and large use index funds, it should really have no effect whatsoever on your investing strategy or how you view the markets or on your investment policy. Well, we're coming toward the end of our second segment. When we come back, I'll finish on this because I think it's important for people to realize that for the long-term investor, this NASDAQ halt in trading was really a non-event. So for All Things Money, I'm your host, David Blain. We'll be right back after a few short messages.